Hey guys, this is a market update, and capitulation in crypto has started. Essentially today we've seen a huge red candle, so another fund selling out or another liquidation from a really big player. In this video I want to talk about the price of Bitcoin and Ethereum, what's happening with them, why there is just so much capitulation, which funds are actually having to do this and why, and when they may possibly actually stop selling, or if they're just going to get completely liquidated. Obviously the price is not going to do anything until all of these liquidations are out and all of the leverage in the system has been completely wiped out. So let's look at some price levels initially. This is what happened today. So you see the price of Bitcoin kind of stabilizing around 20,000. There's obviously a lot of bids around these price levels, right? So you had it around 30,000, you've got it now around 20,000, where, you know, a lot of the market just puts these bids in thinking, well, that's a round number and, you know, we don't mind accumulating there. And then obviously this huge, and this is a massive capitulation candle. It took essentially the price right down from 20,000 here all the way down. It actually wicked down to around what, 18,800, something like that. So for essentially a 30-second time horizon, if we go down to the 5-minute, it was basically just one big dump. And then obviously, there's other kind of, trades in the system and automatic trades that obviously have to start trying to trade this out. And we've recovered from that position. Now, this is not normal trade. This is not, a collection of normal people that all suddenly want to sell at the same time. This is obviously one large player who has a lot of volume that they need to get out. This is a liquidation. This is someone who is obviously very close. They have a lot of leverage. They need to basically pay off their debts, and they've worked out how much they need to sell. And this is just a market sell straight away. This is a huge amount of volume right here. This is because of all of the stupid venture capital funds who are completely over leveraged. And this will not stop until they are out, or if they've basically paid back the vast majority of their loans, which they're in the middle of doing right now. So, these are going to occur. And the thing is, right, is that if you're a trader right now and you know that there's many market participants who are in big trouble, why on earth would you bid up for Bitcoin right now? Like if you know these people are in trouble, you're going to just not bid. And so that is why they have to do these kind of market dumps to actually just essentially get the volume trading and just find areas and pockets where there's actually volume to be traded. Now, this could be a fund or this could be miners. Let's look at some more stats right here. You can see the volume trading is insane right now. So you have a lot of these funds who have spent months or years, with rising prices that are now forced sellers. They have no other option. They're too leveraged. Prices keep coming down, and the more it comes down, the more people that are leveraged and borrowing against positions find themselves having to essentially sell out of those positions to pay back their loans. So we are in a huge capitulation phase right now. I'll leave the link to Bybit in the description. If you are a trader, you can get up to $4,000 deposit bonus on this system. I do not recommend trading right now. If you're a beginner, just sit this out and wait till things calm down a bit. If you're a trader, you can get the deposit bonus right here on Bybit. So I'll leave that in the description. All of the signals that we're getting are showing us that we are at max pain, but it can definitely go lower, because what we've not seen before is this amount of leverage in the system from very large players who basically had access to TradFi and all of the free money coming in there. So this is the first cycle, I think, where we've had the sheer scale of money, the sheer amount of money coming into the system, and that all has to come out. The rise was meteoric, and the fall can also be that way because all of these venture capital funds have mismanaged their funds, mismanaged everything. And with crypto, there are no bailouts. So they're going to get absolutely carried out on a stretcher, and it's the only way, and they deserve that to happen to them. So what you can see right down here, this is Will Clemente on Twitter. I'll try and leave him in the description. A couple of very interesting charts right here. We are at levels that we've only seen a few times before, and these have in the past been buying opportunities at every single time. So this is standard deviations right here. We are down on this line, touching this line. We've only touched it once, twice, 4 times before. Then you look at this is market value to realized value, again in a huge buy zone. Now the thing to note here is that we can stay in this buy zone for a very long time, so there's no need to rush. Like, there are market participants who are just bent over, and you do not need to kind of rush in to buy their Bitcoin. So you can see in 2015 to 2016, it stayed in this range for a long time. In 2019, it stayed for 6 months or so. So it doesn't bounce off of this. There is no bounce right now. The central banks are putting the whole world into a recession right now. So there's going to be no bounce until the central banks flip their monetary policy and start easing again. That's when the bounce occurs. For now, traders who are not leveraged have to give leveraged traders the most amount of pain. It is our job to inflict incredible pain on those people that are over leveraged. We should not pay up for their Bitcoin. So this can stay in the green zone for a very long time. We see here again, everything is flashing a buy signal right now. But the bottom will come when all of this leverage is out of the system. And then, essentially once the leverage is gone, all of the forced sellers are gone. This is forced selling. This is not, people saying, well, I might not buy. I think the fundamental value is a bit lower. This is absolutely forced selling. And so, as a buyer, don't bid up for a forced seller's investments and assets. You have to give them as much pain as possible. And that's what the market is doing now. They are, of course, trying to find volume to deleverage all of their investments. You can see here again, we touched it twice here, third time, and we're at it again. We're actually below this level. So we are at, when you look at it past, through 5, 6, 7 years, these are levels where, buying has been great, but don't think we're going to just level off at this price and then start the upward trajectory again. The macro economy is in a big pain, and nothing's going to change until the Fed flips and starts easing policy, and potentially, if they see a really big recession, ease off of any rate rises as well. When that happens, the market may find a level. Until then, it's going to be pain until all of the leverage is out of the crypto system. Unfortunately, there is more pain ahead, because not just these funds, these over-leveraged funds who are now having to get out, but if you look forward, it's miners as well that are also having to essentially sell Bitcoin now to fund their operations, whereas before they were selling equity or just selling debt, and now they can't do that. So we're going to look over at some mining figures. You see here that essentially miners putting Bitcoin into exchanges is essentially making higher lows and reaching highs that we've not seen for a very long time. So if we think about this, you can see here, why is the dump happening today? Well, this is the biggest miner inflow into exchanges that we've seen in a very, very long time. Obviously, some of the biggest sellers of Bitcoin are Bitcoin miners. Now, if you think about the Bitcoin mining business, essentially what they did, over the last few years is actually sell debt. So they went into the institutional markets and sold, debt, and they could borrow money. They could borrow dollars at essentially nothing, right? Because interest rates were zero. So they would leverage themselves by indebting their business, and then mining Bitcoin and keeping Bitcoin, because Bitcoin was going up in value and it was literally 0% to borrow money. Or like some of them did, they actually went and listed on equities markets. Why? Because the equity markets were pumped up at the time, so they could sell their own equity for extremely high amounts, right? And that would give them cash to go ahead and mine more Bitcoin, and Bitcoin was going up. Now Bitcoin is going down and interest rates are rising. So now what you are as a miner is basically a junk business, because now your business is mining Bitcoin, which is going down at a rate of about 30% a week. So your income is essentially going down by 30% a week, which means that your revenue and your ability to pay off debt is also going down exponentially. And so no one's going to lend you money. And so you have junk bond status. So you're going to have to pay 7, 8, 9, 10% in rate to borrow money. So you can't do that as a miner. The second thing is you can't raise any more equity because your income is going down, because the Bitcoin is going down, and no one wants to buy your equity anymore. So you can't raise any cash in the equities market, because it's basically no one's going to raise money for you. And if they do, they're going to have to get a massive discount to what the equity is trading at. So you cannot fund your business as a miner anymore. So what do? You have to sell your Bitcoin. And this is going to continue. This isn't just a thing now where it's like we're all going to get out and then go up. This could be a 6, 12-month thing. So this could be a very deep winter in crypto, and the only way we're going to get out of it is when the macro settles down and central banks stop raising rates and inflation comes down. That is a very complex situation, but what we're seeing here is these capitulations from miners and funds and everything like that. So you need to keep an eye on who's sending money into exchanges. Are the miners selling a lot over time? And if they start reducing that amount, like when you see miners actually starting to reduce the amount that they're selling, that's potentially when you can see things starting to get a little bit better as well. But there's a lot of pressure that's going to be on the Bitcoin price. And just because we have these capitulations doesn't mean it, it can't carry on. It's definitely not good right now in terms of the macro and the specifics for Bitcoin and therefore the rest of crypto. I also want to highlight the price of oil, and you may think, why are you looking at oil if this is a crypto channel? But this is so important. Oil is the thing that is causing all of this pain right now for various reasons. But what you can see right here is that oil has actually come off a lot. And this is really important to know. In a trade, this is Brent crude, by the way. WTI is cheaper than this. This is Brent crude, which is actually where a lot of the pain is. Trading at like 114, 115 bucks right now. Keep an eye on this because oil is the thing that is going to drop like a stone if the recession is here right now. And you can actually see that it is dropping off. Why is this? Rates are up and people are starting to worry. You know what? The recession is imminently coming, and oil trades as a future. It doesn't trade like a spot. Okay, because everyone knows how much oil is coming out the ground, and so oil is a future and it trades like that. Now, what the oil market potentially is saying right here is that we actually think a recession is basically coming way sooner than later. And if oil starts to drop off and continually sees this coming down, this is going to be good for markets, good for inflation, and good for Bitcoin. This is something really important to keep an eye on. If this starts coming down, the market is saying, actually, we're just not going to bid up the price of oil for 6 months out because that's when a recession is going to come. This is really important for the price of Bitcoin as well. So keep an eye on this. It's showing that they're potentially starting to trade the recession right now in oil. And if that starts coming down, inflation is going to come down. Rate expectations are going to come down. Inflation expectations are going to come down. That's good for risk assets. That's good for equities and for Bitcoin and therefore crypto as well. One of the most difficult macro situations I've ever seen, especially for crypto. If you are a trader, I'll leave the link to Bybit in the description. They'll give you a deposit bonus there in your futures trading account. If you're a beginner, please don't trade this. I think just stay out of the market right now. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.